Hello everyone, welcome to this earnings season preview. I am Nikos Tsavouras, Senior Market Specialist at FXCM, and we will be going over a quick preview of the Q3 earnings season, the last earnings season of the year, which gets underway in the United States this week. Before we move on, however, please take a few minutes to read carefully through our warnings and disclaimers. Thank you for reading carefully through the warnings and the disclaimers. Now let's go ahead and see what we're going to be talking about today. We'll start with sort of laying out the backdrop of where we stand in terms of market developments and market performance, how the stock markets performed recently, and because of which factors this has happened. Then we're going to go ahead and get into the earnings part, a timeline of how the earnings season progresses. Then we're going to go ahead and look at some key sectors and then some key corporations that are in my radar for the upcoming months. Again, there are many sectors and many corporations that are important. I will just be focusing on a handful of them that for me I will keep an eye on just highlighting a few. Obviously, our main focus will be in US corporations, but not only. So let's go ahead and start. First of all, this year and these past few months also, and definitely the third quarter of the year, which just ended a few days back, has been dominated by the Fed's monetary tightening. Not only the Fed though, but other central banks are down a similar road. The US Federal Reserve is one of the most aggressive central banks, of course, in this respect, having already delivered 300 basis points worth of rate hikes since the March liftoff in the most aggressive tightening cycle since at least the mid-90s. And it remains very hawkish. It has pointed to more rate hikes ahead. And this, of course, is happening because of high inflation. They're trying to bring down high inflation and restore price stability. As we said, though, not only the Fed, but the European Central Bank as well, the Bank of England also have been aggressively tightening their monetary policy. Now, however, we're in a stagflationary environment. We said that inflation is very high, and this is what the central banks are trying to combat. But we have also seen that because of these monetary tightening actions and other factors, of course, we've seen a slowdown in economic activity, again, not only in the US, but elsewhere. The United States printed 2 consecutive quarters of recession, Q1 and Q2, but there's no official recession declared, and the Fed has largely dismissed this, mostly pointing to the good status of the strong status of the jobs market. But for all intents and purposes, we are in economic slowdown along with inflation, high inflation, which is described as stagflation. Now, of course, this is not a good environment for stock markets to operate in. And we've seen stock markets declining this year. Wall Street had a bad quarter, a bad third quarter, which just finished, and actually they finished in with losses in excess of 20%. But of course, it's not only the United States stock market, but other markets around the world. For instance, the German index also had significant losses. Obviously, shifting back to the United States, the tech sector and growth stocks are more vulnerable to this stagflationary environment, and the technology sector, Nasdaq 100, was the worst performer and closed Q3 with 35% slump over its December record highs. So that is deep bear market territory. This is the designation for a bear market is usually considered when there is a drop of more than 20% from a recent high. So deep in bear market. But again, it's not only, as we said, the technology sector or Wall Street, but other stock markets around the world. So as the new earnings season, the last earnings season of the year for the third quarter gets underway, this is the backdrop on which this new season comes. And now let's go ahead and take a quick look at the timeline. So the earnings season in the United States kicks off this week. Big banks are traditionally the ones that report first. It's sort of considered them the unofficial start of the season. So we have JP Morgan Chase, Wells Fargo, and Citigroup reporting at the end of the current week on October 14th, Friday, October 14th. And of course, we also have Delta Airlines as well a day ahead. Now, again, we don't have every company confirmed, but most of the major corporations in the United States and elsewhere have already reported, announced their dates. So that is sort of a rough timeline. So big tech starts reporting after the banks, and let's call it the second week. Netflix and Tesla, the streamer and the stream giant and the leader of the electric vehicle revolution, let's call it that way, are typically amongst those big companies that report first. Netflix is on October 18th and Tesla on October 19th. And then things get hot, let's say, and extremely busy. After Netflix and Tesla, the week after that, we have many big tech names. We have Google, Apple, Meta, formerly known as Facebook, reporting during the week of October 24, 28. Then automakers start to kick in, big automakers, legacy ones, and such as Ford, the stored car manufacturer, General Motors, but also European ones, big names such as Mercedes and Volkswagen from Germany. We talked about US banks, then we have UK and European banks also start reporting during the same week, in the week of October 24, 28, and some Australians on their full results now. Australian companies don't typically follow this quarterly pattern for their earnings, and some of the European ones as well. So after that, and towards and after, let's say, the peak of the earnings season in the US, we expect US retailers such as Walmart and Target, which report in the week of November 14, 18th in the mid of November. And then towards this period, we start getting some big Chinese firms as well, many of which have listings in the US as well, either as primary or secondary listings. And some of the biggest names there are Alibaba, Xiaomi, JD, but also some important EV startups such as NIO and XPeng also report later in the cycle. Again, we don't have confirmed dates for every of these companies yet, but we should be expecting that over the next period as the earnings season gets underway. Now, let's go ahead and see some key sectors that will be in my radar during not only for the reporting season, but also in general for any news that they produce over the last stretch of the current year. So obviously the auto industry for me, and either legacy automakers or electric vehicle startups are a key focus. It's a big thing as the world tries to transition into renewables. And of course, we already talked about Tesla, but it's not only just Tesla, it's other makers as well, some of which we will talk about in a little bit. Now, the current environment that we describe is definitely challenging as inflation makes funding, as interest rates makes funding for those cars, if it's VI loan, more expensive, whereas inflation also makes them, and other supply chain issues, stuff like that, makes them more expensive, and they also reduce the disposable income of potential consumer. Now, demand, however, does not seem to be an issue, at least for the EV sector, since electric vehicles are quite hot right now and demand is very strong. And during this reporting season, we will be definitely watching for any commentary around supply chain issues and margins that have been also troubling the industry. Now, another hot sector for me is the streaming sector, streaming providers such as Netflix and Disney. It seems to be a bandwagon that everyone wants to hop in, and other than legacy content companies such as Disney, Netflix, who of course created the streaming industry essentially, or HBO Max. Other companies that are not traditionally related to this have also joined, such as Apple and Amazon, and actually from quite strong content. And Apple, in fact, also became the first streamer to win an Oscar earlier this year for best drama. Now, hot as this sector is, competition, of course, is increasing, and we may be getting some saturation there. So it will be interesting to see how these companies fare in this sector first now, and of course we're heading into the holiday season, which is probably key for such services, for these direct-to-consumer video services. And we have seen already Netflix disappointing and losing subscribers. So definitely a sector to watch. Now, the airline industry is also important. We see how it has been recovering from the pandemic collapse, but this recovery in increased demand has also brought problems, and we've seen over the summer scenes of chaos in airports with companies, be it airline companies, airports, or other firms of the industry struggling to keep up with demand. So we'll be looking to see how they do this time around, and how this recovery progresses. And now moving on to a couple of more industries. One that I find particularly interesting is the buy now, pay later sector. This is a sector where there are many startups that essentially allow consumers to buy online and pay monthly installments or weekly installments. Typically, these are interest-free, but not necessarily. Now, this sector has seen increasing popularity, and even Apple entered this arena in the United States, at least, with its latest iOS software and updated Apple Pay Later services it introduced. But the current environment of high interest rates may be unfavorable, and there are also some regulatory scrutiny as the business expands. So these are definitely some things to watch out, and of course some key companies there is US Affirm, we also have Australian Zip, and some other ones like Afterpay, which was bought by Jack Dorsey's blog recently. The energy sector, the energy giant, is also going to be a focal point. We've seen in the aftermath of the conflict in Ukraine how energy prices skyrocketed, gas and oil, and this caused many firms such as UK-based Shell and BP, or US-based Exxon, French Total, and others posting record profits. However, prices have declined over the summer, and we've seen some activity from governments around the world to sort of try and contain those prices. So it will be interesting to see if they can keep up, or if there's going to be a slowdown there. And of course, last but not least, big retailers, general merchandise stores, mostly in the United States, big names such as Walmart and Targets. Now, given high inflation, these companies saw their profits squeezed. However, revenues are doing well. This is a typical stagflationary performance, and we're going to want to see not only how they do this quarter, but also any forward guidance on how this is adjusted. And of course, other than Target and Walmart we already referenced, there are some other key players from around the world, such as that's Ahold Delhaize, and of course Australian Woolworths. So again, these are some of the sectors that I will be keeping an eye on, not the only ones, but I'm just highlighting some that I find particularly interesting. And now, having said that, let's go ahead and look at a handful of big corporations that I personally find interesting and will be keeping continue to keep an eye over the next few months. Now, Disney of course is up there, mostly for its streaming services. We obviously have Disney Plus, which is the crowning jewel of the company, but it also have some other direct-to-consumer platforms such as ESPN Plus and Hulu. Now, all these three platforms had during the recent quarterly results, they managed to dethrone Netflix with their subscribers. So definitely, again, not Disney Plus alone, but all direct-to-consumer platforms, they recorded 220 over than 220 million paid subscribers. Now, it will be interesting to see if they can keep up. Disney is a growth story. Disney Plus is a growth story in terms of streaming, and it has also announced that it will offer an ad-supported tier starting later in the year. And actually, Netflix is also going down this road. Of course, other than streaming, Disney is another key part is the parks experience and product segment, which had been badly damaged by the pandemic, has been recovering and has registered 6 consecutive profitable quarters. So it will be interesting to see how things go there again. Lots to expect from Disney, which is expected to report on November 8th. Now, Tesla Motors, the EV king, the leader of the electric vehicle market. The second quarter were a bit mixed. We already have deliveries for the third quarter. Full results are expected to be announced next week on October 19th, as we have already covered. Now, the deliveries for the third quarter were good. They hit new record highs in excess of 343, nearly 344,000 deliveries. However, markets did not react very well, and there was a widening in the gap between production and delivery, and that was a cause of concern. In general, Tesla has been all about scaling up its manufacturing this year. It also introduced new plants in Germany and the United States. Although it's not expected to deliver its Cybertruck this year, it's highly popular, which now Tesla has been beaten to the market by other players such as Rivian and for the EV pickup truck market, that is. But Mr. Musk said a couple of days ago that he expects to deliver the semi-truck to Pepsi this year. Now, of course, when we're looking at Tesla, we look at all things Musk, the disruptor and the visionary, and of course the whole Musk Twitter saga is something that we also need to watch, as it came again in the spotlight this weekend. We don't think that this whole episode has so far reflected well on Tesla. Now, moving from Tesla to a legacy automaker, Ford Motors. We like what Ford is doing over the last couple of years under CEO Jim Farley. It's been pushing on multiple fronts and on electrification. It recently said that it's on track to achieve deliveries of 600,000 per year by late next year, by late 2013, and go even further over the next years. It seems to be making highly desirable products, and as we said, it beat Tesla to the pickup truck market. It has already started delivering its F-150 Lightning, the electric version of the F-100 of the F-Series, truck, and it seems to be doing pretty well in terms of reviews. Now, Ford as a whole comes from a strong quarter, and it returned to second quarter and it returned to profits, and the third quarter results are expected on October 26th. And although it had a strong quarter, it's not immune from the industry's challenges. In fact, around mid-September, it warned of an extra 1 billion supply costs that are inflation related. So we see this theme of supply chains and inflation, how it affects, and this warning was for the to be reported third quarter. So definitely a lot to expect there as well. Now, Amazon, we don't have at the time of recording this video a date, but typically within the next couple of weeks we should expect them to release its earnings. The previous quarter, the second quarter, was a bit challenging as it was the second straight quarter of losses. However, overall performance was strong. It also posted in July this year's Prime Day, which was the biggest in history. And actually this week it holds another Prime event, the second for the year. Amazon is also into the streaming business. It has created some critically acclaimed and fan favorite shows, and also doing some moves on the sports segment as well. And it's also getting into the healthcare sector. And of course, we need to remember that this final stretch of the year is the holiday season with Halloween in the US, Thanksgiving. We have, and of course, Christmas and New Year's later on. So it's definitely a big component for its core business, this of online shopping. And speaking of shopping, we'll stop with Walmart, the US retail giant, which both in general, the sector, as we said, had a tough couple of quarters due to inflation and supply chain issues. Walmart over the previous quarter performed better. The previous quarter did perform better than projected, but the bar was very low as it had already downgraded its projections. Now, for the holiday season, it plans to hire 40,000 workers, which is very low compared to what rival Target announced, which is 100,000 seasonal workers. And we'll also be looking for any updates in regards to its push into the e-commerce, which is doing a good job, we believe, and especially leveraging the vast brick and mortar store networks towards this direction. Again, obviously, profitability and margins will be key here. We said that the bottom line has taken a big hit for Walmart and other retailers. Now, again, this was a quick review of the upcoming earnings season. Mostly, as we said, it was focused on the US side, but not only. That's it. Thank you for joining.